Perfect. Hey, good morning, everyone. I'm Chris Parker. This is Kristen Ishihara with the Ishihara and Parker Law Firm here in Longview, Texas. And today we're here to discuss Medicaid and income limits, right, Kristen? So what are we looking at?
Sure. So sometimes we have clients or families of clients that have been told by the facility or have Googled themselves and learned that the monthly income limit for Texas Medicaid in 2024 is $2,829. So they say, well, my monthly income is over that, so I guess I can't get Medicaid. Is that true?
Yeah, no, that is not true, but we do hear that often. Social workers sometimes give this advice as well. And so what we're always worried about, look, if someone has low income, then Medicaid's always a possibility. That's a test easy to meet. It's for the folks who, let's say you make $3,000 a month in income. Well, if the facility's $5,000 to $6,000 a month, you're in that gap space. Like, well, yeah, I don't qualify for income, but I also don't make enough money to pay or private pay.
Right.
So if those situations arise, what do we do? Are they just out of luck or?
Sure. No, there is a solution that you should know about. A Miller's Trust or a qualified income trust is the solution. It's important always to remember that there's two tests for Texas Medicaid, and one is monthly income and one is resources. And we are not talking about resources today. We're only talking about monthly income. So what are some sources of monthly income that we would be talking about?
You know, the ones we see all the time. Of course, Social Security and pensions are the two biggest we see over and over again. After that, it can get more complicated, such as?
Sure. Well, so they are including retirement required minimum distribution. So I'll use RMDs for that when we talk about it. But so your monthly income would mostly include incomes that don't have a cash value. However, the exception to that would be if you're over age 73 and you have a retirement account, that monthly income would be averaged over 12 months, even if you take it in a lump sum, and it would include either the amount that you're pulling out as consistent income or the required minimum distribution that you would have for the year. So that would be the one exception where the asset would have a cash value. That doesn't count for Medicaid purposes, but the required income that you have to draw over the year would be included in their co-payment calculation. So when we talk about income, what are some important things to remember as you're trying to figure out whether you are over income and you need that Miller's Trust?
So whenever I start working with a client, first thing I'm going to get my hands on are the bank statements, right? Because I want to see what is being deposited. But that's just initial inquiry. Once I see a deposit, I then want to track its source. So I want to say, hey, there's Social Security being deposited. But what exactly does this mean? Let's get an explanation of benefits from Social Security. Hey, here's a pension being deposited. Well, let's get the actual 1099 or some kind of verification of income from the actual company to make sure we know what's going on. Because one of the things we realize is while the limit is, what is it this year, 2,829? It's gross versus net, right? We're seeing what's being deposited, but that's not what Medicaid looks at the gross amount. So I want to go back to each source to make sure they're not withholding for federal taxes, make sure there's not something, maybe a life insurance that's out there. There's things out there that are being deducted, which I don't realize are being deducted because they're not being deposited, but Medicaid will 100% hold against me on the income test.
Yeah, a couple that we know you should look out for. Your Social Security is going to withhold for Medicare. That's 174 usually.
Yep.
So whatever hits your bank account, you can add at least 174 to it. Teacher Retirement System, or TRS, often withholds for federal taxes. That's one that I think they must encourage you to do it, because pretty much every TRS pension that we've looked at is withholding federal taxes. So that means that the amount that's hitting your bank account, you have to add something to figure out if you're over the limit. So you should be getting, like Chris is saying, the explanation of benefits so you know. Some of those things will be deducted in the co-payment that goes to the facility. Some will not. So you might want to stop withholding federal taxes from your TRS if you do apply for and receive Medicaid benefits, because they're not giving you a deduction for that. But it's important to look for those things and start collecting that information. Sometimes you can figure it out from the 1099 that you get at the end of the year, but sometimes those don't match because you've gotten a cost of living increase or something's changed. So really, ideally, you have an explanation of benefits for that income from the source itself, which you can request from Social Security. You get one at the end of every year, and it explains to you the adjustment you have for the following year or upcoming year. And TRS, you can also request one, and I don't think they send those annually, but you can request it and get an explanation of benefits from really any pension provider that you're receiving income from.
So whenever I'm working one of these cases, client comes in, I start looking at bank accounts, I start trying to track down the sources, but I just know in my mind, hey, I know the limit's a little over $2,800. So if I'm anywhere near that, if I'm looking at $2,600, $2,500, $2,700 worth of income, I'm starting to think this is Miller's Trust or QIT time, and I'm going to do one. So when it comes to timing, you don't have to do this in advance. In fact, you do it at the time you're looking at eligibility. So if I'm looking at coverage for September 1st, then I can do the Miller's Trust anytime in September. I don't want to miss it. I got to use it in the month I'm applying. Pardon me, but I want to make sure that I get that done in the month I'm applying. So it's not like a rush where I have to qualify for assets, but it is a catch-all. Like, you got to get it right, because Medicaid, they're a little bit slow on their processing, and they may not get to your case till 3-6 months later. And if you're $1 over on income without using Miller's Trust, they will deny you for the last 6 months. You'll owe $30,000-$40,000 to the facility. I mean, it's a real nightmare. So be proactive on that. If it gets kind of close, I get nervous. I just do one. I mean, there's no penalty for being slightly under and using a Miller's Trust, but there is a 100% penalty for being $1 over.
Sure, and using it correctly is very important. So it's a relatively simple document that we do for clients. Well, I don't know that you can necessarily do it on your own, but that you get done, and then you open up a bank account in the name of the qualified income trust or Miller's Trust, and then the trustee needs to move an entire income source from where it hits the individual who's applying for Medicaid's bank account into the qualified income trust. So usually this would first be done manually. If later you want to get it automatically deposited in there, that's fine. But the trick is Medicaid doesn't count a source of income if it is 100% moved into the trust. So you're not moving a partial income stream. You're not doing just the amount that you're over. You're doing 100% of that income where it went into the qualified income trust. And then another important thing to do is to pay it out of the trust. It's probably going to be part of a copayment. It may be part of spousal allowance. You can maybe use it for supplemental insurance premiums. There's a list of things you can allow for it, but the trust itself should never really have more than what was funded into it. So it should be coming in, but then also going out every month. And that's important because if someone dies and there's money in that qualified income trust, that gets paid back to the state for what Medicaid paid out on their behalf. So we're not using it. It's not shielding money. It's not hiding money. It is simply the tool for, if you're over income, how you become under income. But you're not hiding assets. You're not setting it up ahead of time. It's not protecting income. That income is still going to the facility probably as a copayment or maybe to a spouse as an allowance. But it's not helping you shield anything. It's just simply allowing you to apply.
Yeah, when it comes to operating these Miller's Trust or QITs, obviously whatever professional is helping you with it, you need to follow their instructions. For us, on a very simple case, let's say there's a person with two sources of income, Social Security of $1,800, a pension of $1,000. Well, I'm right at the $2,000 limit, so I know I'm probably going to be using a QIT because that's what's being deposited, so I know they're over. So the way I would do it is I would have the Social Security hit the bank account that is traditionally hit, and then I would have them immediately by check transfer it from that bank account to the new QIT trusted bank account that's been created, and then most likely in a single scenario payee situation, that entire amount that got deposited from the bank account to the QIT would then go to the facility from the QIT. So it's all going to the same source. And then, of course, a portion of that $1,000 from the pension will also go to the bank, go to the nursing home. So the nursing home is getting paid from the checking account with the traditional pension and also from the QIT with the Social Security. So that's the way I do it. That's the way we do it. Other people may do it differently. So, talk to your professionals about it. But that has worked for us in the past. But that's right. You want to do it in the month that income comes in. You want to get the money in and get the money out. I like to do it by checks. I don't always trust those direct deposits and stuff like that. Leap years and holidays on the first always seem to mess everything up. But anyway, that's just an important thing to get done. When I'm looking at these income sources, so we just talked about, we're keeping it simple in this conversation with single people, understanding that a single person's income minus some withholdings and exceptions is generally going to be going to the facility as a copayment. When you are a married couple, things do get more complicated. Is that correct?
Sure. Sure.
What does that
So,
mean?
well, as a copayment, then you would probably rely upon somebody to help you calculate that copayment. And the qualified income trust allows for specific things to the facility for medical care and also for spousal allowance. So, it would be hard to calculate that yourself, but if you were using a professional to help you, they should be giving you also the amount that would come out of the qualified income trust for spousal allowance. And so that would just come back to a spouse held in a separate account and be able to be used by them. The qualified income trust does trigger, though, when you submit a Medicaid application, it does trigger a legal review. So it's important when you submit that application that you include the completed trust itself, and the trust would include the income sources that go in there. If you miss that, that's a problem. So it should include specifically the income source that needs to go in there. We also include the signature page from the bank account indicating that it's been open and usually funded with their minimum amount, $100 or whatever that is. And then you want to include the first transaction in and out to verify that it's being used. And that hopefully will allow you the quickest processing because you've given them everything that they need to review on the first shot. So when they submit it, unfortunately, that just adds time, right? So if I've only given them part of the picture, they submit it for legal review. Legal review takes 6 weeks. But if they have to come back and say, well, we can't totally approve this yet, send it back and ask for this information, you've just built in a whole bunch of wasted time with getting your Medicaid application processed. So it is important, ideally, to include all those things up front. A copy of the completed trust done correctly, a copy of the signature card from the bank opening the account, and then evidence of the first transaction done correctly in and out of the QIT. And that's typically what we would recommend you send in with the initial application to help with the fastest processing possible.
So let's say that I'm in a situation where I have a very simple, case on income. I know I need a Miller's Trust or QIT, but my loved one isn't in a position to really be able to sign that trust anymore. They've declined in such a rate where they're not competent, or maybe they're not even awake enough to sign those documents. Who can create a QIT or Miller's Trust?
Sure. Yeah. So the person themselves, often it's the person's financial power of attorney. Hopefully their power of attorney allows them to open bank accounts and create trust documents because that would be required to do it. But often we're having a power of attorney agent create those for the individual because, of course, the individual is probably at a skilled nursing facility and not always necessarily available to sign.
So in other words, QIT, very, very important for Medicaid, not created until it's actually needed, not needed till we're actually in a facility and we're applying for Medicaid. But what is important is laying the groundwork, which makes sure you have that durable power of attorney done in advance and have it done correctly.
Yep, excellent point. Always good to have. But the end message is, even if you are over income for Medicaid, that doesn't mean that you can't get it. You just have to follow the rules and create a qualified income trust correctly, use it correctly, and then really it should just be an additional part of the process. And as long as you've done it correctly, it really shouldn't impede you from getting Medicaid benefits. So in Texas, you really never should be over income.
That's right.
As long as you understand and use the rules correctly. So
let's just test that real quick. So we talked about a gap person, a person who makes $3,000 of income, which is over the limit, but under what's necessary to pay a facility for $6,000 a month. So what if my income is $10,000 a month, and for whatever reason I want Texas Medicaid? Can I do it?
Well, you can, but your copayment is going to take all that income.
Yeah.
So if I have $10,000 in monthly income, I'm going to choose where I want to be, and I'm probably going to privately pay for it. Now, if I'm in a larger city, maybe the cost of care is going to be that much, and it might somehow make sense. But here in East Texas, the cost of a skilled nursing facility is probably closer to $5,000 or $6,000. So if my personal monthly income is over that, everyone gets to make their own choice, but the choice that I'm going to make is to privately pay for care and not receive Medicaid benefits. And then I don't have to mess with any of those things.
But the point being is when it comes to income, it's always a fixable issue.
Correct. You should never be told that income would keep you from getting Medicaid. It would still be an option for you, and it would be one that you probably want to explore. So anyway, that's all we got today. Thanks for joining us, and we'll see you next time.
Bye.